Alright guys, in this video I'm going to show you how to trade oil, specifically oil futures. Okay, I'm going to show you how to spot and capture these exact reversals across the board in oil, really in any market. Nail these reversals, nail these huge trend-based moves, and I'm going to show you how to do it without any indicators at all. Let's do it. Alright, what's up guys? It's Mark here at Dino Trading. First of all, hope you and your family are staying safe, staying healthy, and most important, staying indoors. These are certainly crazy times that we're living in right now, and frankly speaking, there's really never been a better time to be a day trader, and not just for the simple fact that the markets have just been roaring. Every time you turn around, there's like a huge move happening, but also, it kind of feels like most of the world is going to be working remotely from home for at least the next 6 months, right? And if I check the calendar right now, we're basically April of 2020. So you take 4, you add 6, that puts you at 10. So that would be October. This is real, folks. I mean, we are literally going to be a nation that's going to be working from home pretty much every day from now through October. I'm talking almost anybody that works in any industry, right? Factory workers, salespeople, insurance workers, even lawyers. I mean, the whole world is probably going to be at home, working from home remotely. And I firmly believe that day trading can be a potential source of additional income, or what I call supplemental income. All right, so what I want to focus on here in this video is how to trade oil futures and really just instruments in the commodity space like oil, like gold. I know there's a lot of gold futures traders out there. Even things like soybeans futures, that's another great volatile instrument to trade. I feel like any of the commodity futures are pretty good to trade right now. But oil specifically is the case study that we're going to take a look at in this video. All right, so first, let's talk about the math. Okay, when it comes to futures trading, you always want to be aware of what is the profit movement of the instrument that you're trading. Okay, every instrument has its own profit calculation, profit measurement, what's known as the tick movement, and oil is no different. All right, so how oil futures works is every one tick that oil moves. As an example, if you buy oil at exactly $29 and you sell oil for $29.01, that's one tick. Okay, so if you did that, you just made yourself 10 bucks. Okay, so that's the profit measurement with oil futures. One tick, it equals 10 bucks. Now here's the thing. Whenever you trade futures, you also want to be aware of what is the daily range of the instrument that you trade, right? And hopefully, if you've been following my videos, you understand that to find success in trading, you gotta trade wide-ranging, very volatile instruments, not quiet markets. We want to trade scary markets, right? Wild man markets. So oil is interesting because oil has been averaging 100 to 200 ticks every single day for at least the last few months. I mean, the volatility in the oil futures market, it's through the roof. Okay, so if you do the math, then this is the actual potential that you can make trading oil futures, and this is just on one contract, right? You can kind of do your own math if you were trading several contracts, like 2 contracts or 4 contracts, then multiply this by whatever the contract size is. But this right here is the basic math when it comes to trading oil futures. Okay, so you can kind of see why people like trading oil futures, because it has huge potential, right? So if we go back and look at the chart and look at every one of these 3 signals, let's really drill down on a microscopic basis. So here's the long signal, here's the short signal, and here's the long signal. Okay, nothing new there. It's color coded. I think any 6-year-old could understand what a buy signal or a sell signal looks like, right? But here's also another interesting about oil futures, okay? If you know my strategy, then I'm a big fan, huge fan of retracements. So when you get that signal bar, you want to draw the high and the low, draw the high and the low, draw the high and draw the low, okay? And what you can kind of see is that oil certainly gives us a retracement across the board. In fact, on the most recent 24-hour session, which is what you're seeing here on the screen, we were 3 for 3 on oil futures trading. And by the way, for those of you guys that are following along at home, if you're wondering about my dyno bar speed settings, I'll quickly show them to you. I am running a dyno bar speed setting of 1000. Okay, I found that works very well on oil futures. Okay, but what's interesting about oil futures is that this is a strong market, right? The retracements, they come quick, really quick, and if you blink, you'll miss it, you know? So the oil futures markets is one of those markets that I think you have to be very diligent. In fact, you should be extra diligent, extra careful on how you implement your oil futures trading strategy, right? And of course, no matter what you do not use any indicators whatsoever. You know, I've said that before. I'm going to keep saying that. Indicators are a giant waste of time. The only thing that's going to work is price action based charts. Okay, so if we take a deeper dive here into the actual trend-based move on this long signal, on this short signal, and again on this long signal, then this was the potential number of ticks that was available on the most recent session. And now granted, you know, this was by no means a normal session. The volatility absolutely exploded, and that's what you want, right? That's what you wish happens in the market that you trade. You want to see the volatility skyrocket, right? So if we add up the potential ticks that were there to be had, then this right here is what the math works out to, right? 750 ticks times 10 bucks a tick on oil. That's a shocking, a jaw-dropping, in my opinion, $7,500 potential just on one contract. Forget about trading 2 contracts or 4 contracts. I'm just talking one contract, right? So now you're starting to get the idea on why oil futures trading and commodity trading in general is so popular. In fact, let's look at another popular one, gold futures, okay, which is this chart you see here. The ticker symbol on gold you can see in the top left here is GC. I believe that just stands for the gold contract. And again, I mean, look at these beautiful moves every single day. In fact, the biggest move was the early part of the week. This was, just trust me on this, when you see gold dropping or even rallying, but in this case dropping $50 per contract, which is what it did right here, right? Here was the short signal. Draw the highs, draw the lows, looking for the pullback, the retracement zone, etc. Nothing new there. $50 plunge earlier in the week. I mean, once again, you know, I think you can see why people are really drawn to and attracted to commodities trading. So for those of you guys that you know, you love your stock index futures, and there's nothing wrong with that, okay? Those of you guys that love the S&P, you love the NASDAQ, you love the Dow, you love the Russell, that's great. But all I'm saying is try to keep an open mind, and at the end of the day, we're all trying to make money, right? So you never really want to be tied into or sort of obsessed with any one particular instrument, okay? I think if you diversify your trading instruments into the commodity sector, specifically oil futures and gold futures, you know, I think you're going to find a lot of success very quickly. And you know, granted, this was a huge up day on oil. Oil rallied something like 20 to 25%. It was probably the #1 biggest up day in oil futures ever. And just like we had a big up day, right? How much do you want to bet that we're probably going to have a huge down day on oil futures when the market opens in exactly 6 hours from now, right? Don't forget the futures markets does open Sunday night Eastern Standard Time. So like I said, the volatility, I think on big up days and big down days, the volatility is going to be awesome. Everything you see here in terms of the potential, these are real numbers, folks. I'm not making any of this up. This was the exact potential on the most recent oil futures session, and I feel like this upcoming week is also going to be massively volatile, and there's going to be some great trading opportunities in the oil futures markets. Okay, and this is the exact strategy, this is the exact chart setup that I'm going to be looking at and monitoring and watching very closely pretty much all of next week. All right, guys, so listen, thanks for watching this video. If you have any questions on the dyno bars, get in touch. Stay safe out there, guys, and as always, I'll see you on the next trade.